All right, all right. Good morning, guys. Sorry for the start late start, the start late. We are here. We made it. Had a little technical difficulties with my tea this morning, so running a little bit behind. Let's see what's going on. The first thing we need to do before these morning bells open up is we need to pull up the news and take a look and see what's going on in the news. And my news got all messed up. So let's come in here and we're going to go to the impact. We're going to go on impact 2. And my countries, I am going to clear all the countries. I only want the United States. I'm going to hit save on that. Categories, all events. And I want UTC 7. Don't forget that. And we have this morning, Friday, 6 a.m., Fed spoke. And 6:30, we had building permits. So building permits came in. The forecast was 1.5 and the actual was 1.47. So that was bearish. Should have been bearish again. We don't determine whether the reports are bullish or bearish. We have to watch and see. We can try and decide, but it's more important for us to watch and see. So this is the PPI. This is the purchasing. Isn't this the purchasing managers index or purchasing price? Oh, it's producer price inflation. Oh, this is the inflation. I was thinking that was purchasing price, purchasing managers. That's the PMI. So this is the PPI. Producer price for final demand. The U.S. were up 0.3 months over month, January 24th. The biggest increase in 5 months. Producer prices for final demand in the U.S. That's not good. So 0.1 to 0.3. So that's bearish too. Building permits, 6:30. These all came in at 6:30. Lots of stuff happening. At 8 o'clock, we got Michigan consumer sentiment, 70.9. What do you think the consumer sentiment's going to come in? All this bad news. I think the consumer sentiment's going to come in with great consumer sentiment. Everybody loves the market, thinks it's great. Okay, so the market flushed. Came right back, A, B, C, right back to the blue line. Now it's flushing off the blue line. So this is the opening bell right here. Where do you think that market's going to go? Today we're going to do a little bit of, I want to kind of follow up on what we talked about in class last night. We talked about the indicators, and then we went to the next level, and we went to the, we talked about the cat's meow, which is a multi stop strategy that allows you to stay in the market a little bit more aggressively or conservatively. I guess it depends on how you look at it. A little bit more aggressively in that you want to stay in the market longer and have more staying power with your stop. So there's a multi-option or not option, but a multi-order strategy. And so with the multi-order strategy, it gives you the ability to stay in the market longer for longer trends. There's advantages and disadvantages to doing that. So the advantages are, of course, that you might stay in the market for a longer trend. The disadvantages are if the market does turn around and go the other direction, then you could take a larger loss on your stop because you hold your stop at 3 different locations based on 3 different trading strategies, right? 3 different indicators. And we're gonna try that today. Follow up on our class last night and continue through. I also want to follow through on our class last night. We reviewed the zigzag indicator, a new indicator that we've not talked about before. And I also talked about the accumulation distribution model. So I want to go over and apply that in the markets. Now, I know we've talked about accumulation distribution in the past, but I'll review it a little bit again here today. It's one of the most important things that I think we can learn about. And then we're going to go over and look in the stock market because we've been watching Tesla in particular, and a bunch of my class members reminded me, or a couple of my class members reminded me that we'd been watching Tesla. And so we want to make sure we go over and take a look at Tesla today too. All right, let's watch what's going to happen down here. That's why I've been kind of keeping my eye on the Dow and on the Russell. The Russell, everything's fallen except for the Russell. The Russell's trying to rally right here. It's trying to go up and touch that blue line one more time. I think it's going to flush. So we could come in here and put an order on here. And we'll just trail. If it turns and starts to fall, we'll take a risk on this one. There's our single. Let's put in, oh, I missed the second. We'll just take it like this. Oh, come on. Get in there, you dog. So I took a second position. Now what I want to do is I'm just going to trail with 2. I want to see it break those yellow dots. See if we can get it to break the yellow dots first. Come on, buddy. Follow through to the downside. Look at all the other markets falling. So we'll see if they won't porpoise for us. Lan, why are you trading the Russell? You usually trade the Dow. Don't give me that. Don't give me that. Usually we're trading the Dow, and then I get your vibes coming through the internet saying, why aren't you trading the other market? You always trade the wrong market. I know. It's tough. You're always in the wrong market, Lan. You're not trading the one that's moving in our direction. Look, the NASDAQ's starting to kick up again. That could be another opportunity for another short position. It looks like we're going to have to. Let's see if that wants to go up or down. Up or down. Is it going to go up or down? One up for every down. There it goes. Come on. Go down and break those yellow dots for us. At least do that. Can't you at least do that? Friday morning. Opening bell. The market's dead on a Friday. Doesn't want to trade for us. I guess we better put our stop in there. Going to get stopped out on our very first trade in the morning bell. How about that? Doggone it. Reverse, Land. Reverse. I don't want to reverse right there. We got bad news, and this market's trying to go up on bad news. Look at this. In a triangle, little pennant formation. I thought we were going to drop out the bottom like the rest of them, but no. Cousin Russell has to do something different. Can't be the same as everybody else, Cousin Russell, can you? One up for every down. Going sideways. Now we got the down. Well, NASDAQ's trying to rally too far. Did we get filled on that Nat? We did. Oh, my hell. Well, here we go. We're going to try again to the downside on the Russell. We'll try again with the Russell. Got a clearing bar on the Russell, and then it looks like it's trying to be a flat top red bar. That's bearish. It's just doing nothing. Dead. Michigan Consumer Report comes out at 8 o'clock, so everybody's sitting on their hands waiting for the report. Okay. It's a good opportunity for us to say, well, there ain't nothing going on here. Let's go look at the stock market. I wanted to look at the stock market anyway. I got it all pulled up here, ready to go. And so we're going to start off with Apple. And Apple, we're just going to go back and do some analysis on this thing. You can see this came up here. We had a double top, and I've never not been a real big fan of Apple lately. And the reason is they've been buying back a lot of their stock. And when that happens, that means that they get a fake earnings, profit to earnings, PE ratio. Because that goes, they look at the share price, and then they compare that against how many shares are outstanding, right? And so then they give you a false signal because they bought back a bunch of shares. Therefore, the share price against the number of shares outstanding, not a fair calculation. They bought back a bunch of shares. So now it looks like they're making more money in comparatively than they really are. And they've been doing that a lot lately. Apple has not been doing well lately. They want you to believe that they have been, but they are not. They are not doing well. They have been hurting. And why have they been hurting? All the other big markets have been pushing really high and going really nuts and crazy. I mean, look at Meta. Let's go look at Meta real quick to compare. Why has Meta just been going straight to the moon? And we talked about this one. Look at this. We came in here with our A1. There's our A1. There's our A2, our B1. And then here, we come in here, this one right here. That's C1. So this was some of the notes from our last look at these markets. So there's C1. So this market took off. There's a little C2 right there. C2. And then we got C3. So you get C3 right there, CP3O. Always reminds me of C3PO. C3, C2 right there. So you got your little, so your breaks of your blue light, that becomes your A. You can look in there. There was an A2 right there. We'll just throw it in there just so you can see that we do get those in there too. So we got an A2 and then it failed, didn't go up. It came back down. So that A2 failed. Let's get rid of these arrows. And then we got the new drive, the new B, each one starts with the breaking of the blue lights, right? So the breaking of the blue lights is your A drive, breaking of the blue lights now is your B drive, breaking of the blue lights is your C drive. The little pullbacks, these little flag formations inside of the C drive, because it didn't break the blue lights, that becomes a C2, and then this one becomes C3. So why has Meta been going to the moon while Apple been sitting on their hands? Make you wonder? Well, first of all, they've been buying back their stock. They've not been doing so well to try and pump up their shares. So we got a 3-drive pattern down. We got that 3-drive pattern, and then they took off like we expect, right? Now we're going into a triangle wedge formation up here at the top. But they're not going to the moon like everything else because they're not doing anything with AI. I knew you all knew that, right? As soon as I said it, you're like, well, they haven't done anything with AI. And AI is what's been driving these markets. If you go look at the S&P 500, let's go look at the S&P 500. The S&P 500 is going to the moon. Let's go look at the Qs. The Qs going to the moon. In fact, there's the Qs that we put that ABC pattern in there last time. Let's come in and decorate this one up, should we? Because we got our base, our basing pattern in here. Draw that in there. So there's our basing pattern, right? 3 drives down. So we got drive 1, drive 2, drive 3. Now we're going, look at this. This QQQ is going into a 4th drive. Can you believe that? What's driving the Qs? AI. This is going to be B1. We're going to do another one here. This is C1. And look at this. Oh my hell, D1. That's rare. Rare. A1. Unbelievable. A1. B1. Right? C1. And oh my goodness, D1. Why has the market been going just nuts and crazy? AI, artificial intelligence. You thought it was because Biden's plan. Build back better. No, sorry. Denied. It's not the build back better, spend more money on your credit card to make more money. That's not how it works. This is all AI driven. This is all because artificial intelligence and all these markets that are going AI. Apple, no AI. I mean, we got the push, right? The 3-drive pattern push. But then why are they not going to the moon? But I'm telling you, they're announcing that they're going to be doing some stuff with AI. So that should probably give people some confidence that Apple's going to get into the arena and fight, and go with the rest of these guys and their AI tools. Let's go look at Microsoft, MSFT. MSFT land, MSFT, where is it? It's not in our list. MSFT. Why is Microsoft going to the moon? AI. They're in the AI race. Apple, not so much. They won't even say the word. They won't even call it that. Do you know that? They won't even say the word AI. They said it like for the first time the other day. So this was well, we only got 2 drives down on this one. We got drive 1 and we got drive 2, and it turned on us and started to go. So the first break here to the upside has to be right there. That makes it hard. Let's kind of look at this thing for a second. You kind of want to say that this is your, come on, how do I move that? This is your, you want to say that that's your A1, but it's not. That would be a, on the way down, we're going to call this X1 A1S. This is B1S. The breaking of that would be X. It's the X2SA1. X2SA1. So it is an A1. All right, so that's our X2SA1. So we have to call that A1. That there makes this a B1. And that's an ugly little B1. I don't like to call that B1. But we're going to do it anyway for now. Because that makes this C1 up here. Okay, so there's our C1. There's a little break right here and kind of duffed around in there a little bit, but that made our C1. So there's our 3-drive pattern. It's ugly. Drive 1, drive 2, drive 3 on Microsoft. But why is Microsoft going to the moon? AI. And it's what's been driving these markets. So if we go to MAGs, right? We all know MAGs. I've been bragging MAGs lately. What is MAGs, Lan? MAGs is an ETF of what we call the Magnificent Seven. It's the stocks that make up, I think they tried to take Tesla out of it, but they shouldn't, because Tesla's going to go to the moon. You watch and see. It's got Microsoft in there. It's got Apple in there. It's got Netflix. It's got Netflix. It's got all these big markets that are in the QQQ. All right. So it's got all these big metas in there. So that's what the Magnificent Seven is. It's the ones that make the Qs run. The Qs, if you go back and look at the S&P and you go back and look at the Qs and you go to those programs that can compare, you list them. There's a software program online. It's called one of these websites. I can't remember the name of it, but you can type in like 10 URLs, not URLs. I'm sorry. 10 stock symbols. You can type in like 10 stock symbols and it'll start them all at 0 and show you how they all compared for the year. And when you look at the S&P 500, the S&P 500 is pretty much flat for the year. The whole thing was just pretty much didn't do anything, except for the Magnificent Seven, which are all involved in the AI world, and they all took off and went to the moon. So they're the only things that are dragging the S&P up. They're the only markets that are dragging the Qs up. So otherwise, the market would be flat, wouldn't be doing anything. In fact, a lot of the stocks were even going down. So it's this AI boom that's causing all this rally in the market. And we've had some good news. I mean, I don't want to deny that. We've had some good news, but the news has started to turn around. It's not coming in great right now. We've got to be careful. And so the Magnificent Seven is where I've got all my money. This is where I've got almost all my money right now. And I have to be careful because look, this is our base, right? So this is our base right here. And then that was the 3-drive pattern down on the base. Drive 1, drive 2, drive 3. We call this third time's a charm, right? Third time's a charm. So third time's a charm. That baby rock and rolls up out of there. So that's A1. This is A2 or B1. This is C1. This is D1. Okay. So these markets have been on a clip, man. They have been making us money. So hopefully you've been capitalizing on this run as well. And we're coming up into a scary location right now. But with all this AI push, I don't know, man. I'm scary to take profits up in here and get out and not want to be a part of it. But that's what it's telling us. Be careful. Let's label these exits. This is X1, right? This one here is X2. This one here is X3. And this is X4. Don't generally see an X4. I can't remember the last time I saw an X4. So there's your X1 right there. There's your X2 right there. And that little break right there is almost ugly. So we could call that we could come up here and say, well, that's a combined drive. And if you go and get the Elliott wave manual, and it's about that thick, you'll be able to find a caveat in there somewhere that says, oh, we can combine those. With hindsight, we can combine anything, right? So we're not going to play hindsight. We're going to play real world, and we're coming into an X4. That's not good. Okay. So that's on the Magnificent 7 coming into an X4. Apple is dumping on us. So, but it's holding this boundary right here. So I'm looking for it to come down, test this, see if it holds, and then we're looking for a rally. All right. So we do want to see Apple come up out of this thing. We're looking for a higher high. We want to see if you go to the Fibonacci ruler, we're coming through an accumulation zone. Okay, so this market came up through that whole trend, come back, and it's sitting right here playing in the Fibonacci sweet spot, right? Fibonacci sweet spot between 61.8 and 38.2. This tells us we should be looking to maybe start accumulating some Apple in here. And they are getting ready to announce some AI stuff. So that should get people excited about Apple. Everybody wants Apple to have AI. And they're projecting that they're going to have AI on your little phone, and Siri is going to now be AI. So you'll be able to talk to Siri, and she'll actually work. So because she'll work like AI. I don't know how many of you have got the Chat GPT on your phone, but can you see my phone? You can. If you go to Chat GPT on your phone, you can put Chat GPT on your phone. You can't see it. There's a little icon. See the little icon right there? That's Chat GPT. And if you open it up, it comes up, and there's a little headphone in there. Now, you have to be a paying subscriber, but I hope, I'm sure everybody here that's talking to me is a paying subscriber to ChatGPT. Why would you not be? So you touch that little headphone right there, and she turns into Siri, and you can ask her anything. Can you give me a quick description of the accumulation distribution model as it pertains to the Chalkin money flow?
The accumulation distribution line, ADL, and the Chaikin money flow, CMF, are both technical analysis tools used to assess the flow of money into and out of a security. The accumulation distribution line is a volume-based indicator designed to measure the cumulative flow of money into and out of a security. It does so by comparing the close price to the range, high to low, of a security's price for a given period. If the close is near the high, it suggests accumulation, whereas a close near the low indicates distribution. The ADL moves up or down based on this comparison, offering insights into whether a stock is being accumulated, bought, or distributed sold. The Chaikin money flow, developed by Mark Chaikin, combines price and volume information to show the buying and selling pressure over a set period, typically 20 or 21 days. The CMF calculates the volume-weighted average of the accumulation distribution line within the specified period, focusing on the closing price relative to the high-low range. A positive CMF value indicates that a stock is under accumulation, while a negative value suggests distribution. In essence, while both indicators are concerned with the flow of money, the ADL offers a more cumulative, ongoing tally of money flow based on closing prices and volume, whereas the CMF provides a more focused, averaged snapshot of buying and selling pressure over a specific time frame. Both can be valuable for identifying trends, with the CMF particularly useful for confirming the strength of a trend based on the consistency of buying or selling pressure.
See that? That's pretty cool, right? That's what you think Siri's supposed to do, right? I'm going to cancel that. She's going to think I'm asking her about Siri. That's what you'd think Siri would do, right? No, Siri can't do that. This is Microsoft. Here, we'll try. I give you something else. Watch this. Tell me what the Fibonacci ruler is for. I see on my screen I have a Fibonacci ruler, and it has a 38.2, 50%, and 61.8% level. Can you explain why those are important to me?
Fibonacci ruler, often used in technical analysis for trading stocks, futures, and options, is a tool based on Fibonacci retracement levels. These levels, 38.2%, 50%, and 61.8%, are key percentages derived from the Fibonacci sequence, a series of numbers where each number is the sum of the two preceding ones, e.g., 0, 1, 1, 2, 3, 5, 8, 13, 21. The sequence, and by extension the Fibonacci ruler, is named after Leonardo of Pisa, known as Fibonacci, who introduced these concepts to the Western world in the 13th century. The importance of these specific levels, 38.2%, 50%, and 61.8%, in trading and technical analysis comes from their observed relevance in financial markets, where they often correspond to levels of support and resistance within price charts. Here's why they're significant. 38.2% level. This is the first Fibonacci retracement level, indicating a shallow pullback or correction. If the price retraces to this level and then resumes its prior trend, it suggests the trend is strong. The 50% level, though not technically part of the Fibonacci sequence, the 50% level is widely used by traders. It represents a moderate retracement and is based on the Dow theory's observation that prices often retrace half of their previous move. A bounce from this level can indicate potential for the original trend to resume. The 61.8% level, this is the most revered Fibonacci level, often referred to as the golden ratio. It represents a deeper correction and is considered the last line of defense for a trend. Traders use the Fibonacci ruler to draw lines on price charts between high and low points of a price movement. The levels then serve as potential indicators of where prices might find support or resistance and reverse or pause, helping traders make decisions about entry and exit points, stop loss orders, and predicting potential price targets in the context of a trend. The underlying theory is that markets tend to move in predictable patterns, and these Fibonacci levels can help identify those patterns.
I just got put out of work. You don't need me anymore. That's amazing, right? That's Microsoft paying for that. Where's Apple? Let's try Apple. All right, let's try Apple. Hey, Apple. No, that's not Apple. You can't call her Apple. That's not going to work. Hey, Siri, can you explain to me what the Fibonacci ruler is, please?
Here's what I found.
She gave me a search on the web. Here's what I found. I searched the web for you. All right, let's go look at Apple's stock. There's why Apple stock is not flying to the moon. And that's why Microsoft stock is flying to the moon. All right. MSFT. Boom. What's the difference? Did you see the difference in their two products? That's the difference. All right. So Apple lagging behind, but they're going to come out with a product that's supposed to make Siri talk to you like ChatGPT, which is Microsoft. Okay. So this is an opportunity to possibly see Apple coming down here to the Fibonacci sweet spot into the area of support along 50, 61.8. And there's a possibility that when they announce their Siri is going to talk like ChatGPT, this thing could go to the moon. So there's a trading opportunity for you. Start accumulating your Apple on the anticipation that they're going to get in the ring and start fighting with Google, and Google's got one too. Here's Google's stock, and they unfortunately don't have a product like Microsoft. You got Google, and you can't. I mean, they've got little products, but you can't sit there and talk to Google like you can to the Microsoft. That's ChatGPT. So that's why Microsoft's just kicking butt right now. So here's Google, and you got your. Not that Google's not been doing well. They had a full reset here, and then they went with another 3-drive pattern: drive 1, drive 2, drive 3, and then they had a reset: drive 1, drive 2, drive 3. So now you got this little topping formation in here, and they've been doing well. I mean, they're in the race. They're at least they're trying. They're trying to beat Microsoft and their Chat GPT. But they came out with a new product I saw yesterday. They renamed it. It used to be called Claude, and they renamed it to something new, a little bit not quite so human sounding. So there's our little wedge pattern coming in there. That's got an ugly background, Lan. Why'd you make that like that? I think we were looking at make it rosy. That's not. That's just an ugly color. There, we'll go with that one. It's a little better. All right, so this is kind of what's happening up here with Alphabet, with Google. So we got 3 drives up. We're getting a little blow off. Put the Fibonacci ruler in there. And we're back down in here at 38.2 right now, sitting on 38.2. Probably going to come down, and we'll look for this to keep coming down, probably somewhere into the 61.8. And maybe it'll hold right down in here. We got a 50% support level right here. Might come and test that again. But we're going to look for it to come down here into the Fibonacci sweet spot, bounce around a little bit, and it should hold around this level here, and we should be able to start accumulating some more positions for another 3-drive pattern up, drive 1, drive 2, drive 3 coming into the future. Okay, but we need a little pullback. That's good for us. That's where we get to buy low, sell high. So let's go in again. There's Apple. Let's go to ADM. Archer Daniels Midland. This is one we've had our eye on, right? We've been following this one. Man, this thing's tanking. We follow this one because they're a big commodities company, right? So you can see the 3 drives down, the little break right here. And we started thinking, hey, maybe we're going to get a reversal right in here, get the ABC, and it never did break those blue lights to the next upside. We got a little false break right there, and then just teased everybody off of that 3-drive pattern, and flush down that thing went. So that's a it's a good buy right now. It's not like this company's going to go out of business. This is food, America's food, world's food, world food company. So we're down here now. I'm going to watch this just for a little bit. You can start doing a little accumulation down here if you'd like. Nothing wrong with putting a starter in here right now on that right there. That would be a good place for a starter. And here's another 3-drive pattern down. ALB. I can't remember why some of these were on our list. I think we went through the what was the tool we used? I think we went through ChartMiner, didn't we? And we pulled up these, and a lot of these were from ChartMiner. This is the ones that we had listed as our YouTube portfolio. And this is where we were when we ran the options class last time. We had a bunch of options on all these, and I accidentally hit the button and cleared them all out. But we're down here getting a nice little double bottom now. Look at this. This is looking good. So we're getting this little double bottom down in here. Possibility of a start to climb up out of this thing. So again, that would be a good place to put a starter in there. It's a little double bottom in there. It's holding. Had a little rally. This was our little pop rally, right? Pop it, guys. Bring them in. Get them to look at it. Let's accumulate a few more. Let's pop it the next time. So the second pop is the one that generally goes big. We got our call to arms right down here. Those of you who were in my class last night know what that is. That's where this MACD starts to turn and go green on us. So it's the call to arms, which indicates that we anticipate this thing to continue up and break above the 0 line on the MACD on the histogram. So when it crosses that, then we're in positive territory. And up it goes. All right. We're getting convergence. Last night we talked about in class divergence, where divergence is where the market is making lower lows in the market, but we're getting higher highs in the indicator. Well, now we got convergence on this one, where we got lower. This one actually was higher, but then we got another lower. So lower and lower. and now it's turning, and now we're getting some more convergence. So this is lower and this is higher. This is low, and this is actually kind of a double bottom in here, but this is higher, and that's bullish. Just saying, that's bullish right there. All right. So chalk and money flow gave us the 3 pattern, right? Talked about that last night too. We got 3 patterns down. We got the reversal. This is the pop rally, and now we're coming into another reaccumulation. We're ready to go long on this market. ALB. We're ready to buy. $121 per share. You have to decide if that's in your budget to put a few bucks on there. Let's come in. We talked about this is the Dow. Again, the Dow coming in here. Drive 1, drive 2, drive 3. We got our base, right across there. Crossed that 28 period moving average right at the right spot too, didn't it? Right there on that. Is that 28? No, 50. That's 50 period moving average. And so there's our monster move in the Dow. Lan, why do you always trade the Dow? That's why. That's why. Right there. Look at that baby go to the moon, right? Straight up. One drive. Then we get a break right in here. We're on the second drive of that Dow. That's just unbelievable. Beautiful. Got another little drive right there. Up we go. We're going to get one more out of it, or is it going to go up and crack that and flush? I don't know. If you listen to all the doubters, it's going to flush. But what's pulling this back up too? It's the same thing. It's all those AI. Again, if you go and look at the Dow 30, and you pull out the mags, it's not doing anything. Go pull out the mags from Dow 30 and you see it's flat. It's doing nothing. So it's AI that's doing this. FMC. I'm not sure what that one was in there for, but it's lots of drives down. Starting to get this is the pump. If you love this company and you just got to get some, now would be a good time to maybe put a couple bucks in there. It's $51 a share. It's double bottoming. Not yet. Don't buy this one yet. Wait for it to crack. This one here. We want to give it a little crack. We want to see it go up, pull back, and then that would be where we'd want to come in right here. Okay. And then General Mills, it's basing. It's coming in here. Coming into a wedge pattern. Wants to break out. 3 drive pattern right here from the peak. Drive 1, drive 2, drive 3. 3 times is a charm. 3 times a charm, Lan. There's drive 1, drive 2, drive 3. Oh, that got a 4th drive on it. Oh, but that's such an ugly little thing. We're going to combine that one. How can you do that? Well, it's called hindsight. Hindsight. We all trade in hindsight. There we go. So that's drive 1, drive 2. And then that makes this a little teeny drive 3. Why do you want to just do little teeny drive 3 here and not a little teeny drive up at the top? Oh, I don't know, because I want to have 3 drives. All right, knock it off. Quit being stupid. This is 4 drives. Okay, 4 drives. Drive 1, drive 2, drive 3, drive 4. Call it what it is. Quit playing the game. So that becomes a drive, A, B, fail, and then we get 3 drives back down. So we want to see this thing pop right here. This is the little pop rally. It wasn't very strong. We see the next pop rally. I want to see a little ABC coming off that before we get crazy on General Mills. Here's Google. Again, we talked about Google. Hasbro. What do you see on Hasbro? Toy company. Coming into Christmas? No. Leaving Christmas. They must not have had a good Christmas. Well, yeah, this is their Christmas. This is their Black Friday. So they got their pop. Coming in here with drive 1, drive 2. It's getting a little crazy in here. They want to go, don't they? It looks like it wants to go. Had a little pullback here and then a pop up. They want to go. That market wants to go up. There's another one that wants to go up. You wouldn't be hurting if you wanted to put some money on Hasbro either. Wouldn't be a bad purchase. It wants to go up, but it doesn't look, I don't know. It may get one more down because we got drive 1, drive 2. We might get another little pull and then the rally. Hormel Foods. Hormel. Oh, just keeps going down, down, down. Down, down, down. Wait for it to turn around. The Hershey Company. Now, this is one that I was kind of a little bit more bullish on. I'm in the Hershey Company. I thought we were going to get a better run out of this thing. I thought this run was going to be a little stronger. This is a seasonal trade off of our trade miner software. And so seasonally speaking, this thing generally runs. And I was looking at this thing coming down. We got, look at this. Drive 1, drive 2, drive 3, drive 4, drive 5, drive 6. This thing's really been struggling this year. Not a lot of people buying chocolate when they can't buy groceries. So then you come in here, we get this other kind of a little reset. We think we're going to go here, and then we get another little drop there. Creates a new low. And so this ends up looking like a head and shoulders formation right in here. This is your left shoulder. This is your neckline. This is your head. Who came up here? You could say this was your neckline, and that's what I did. I came in here. That's my neckline. And then this is my right shoulder. So that come in there and broke that. See, broke right there. Starts to rally. Got a nice big pop up in here. But then it had a big clearing bar, came back down, and it's bouncing off that area of support right now. I want to see it. I want to see it go. I want to see it go, go, go. Come on, buddy. Pick it up. Otherwise, we're going to have to, well, I don't have a huge position, but I got enough on there that it's, I don't want it to fall. Come on, guys. Everybody go out and buy some chocolate bars. Illumina. This is, we got all of our drawings still in on this one. So we already talked about this one. Drive 1, drive 2, drive 3, drive 4, drive 5. We got the first push, and it's starting. It wants to go. It wants to go. There's our little pullback right in there. And there's our next little pullback right in there. That baby wants to go. There's our little flip-flop right there, down, up. That's what Doc Brown looks for. He likes those. When he sees those, he buy. Big time, buy. It's neutral, so kind of down here in the neutral zone on our indicators. So wouldn't be a bad place to put a couple bucks on there. I'm not sure if I want to be an options buyer on that market. We already talked about mags. I'm getting a little nervous here on mags. But if Apple will announce, we could call this a reset. I mean, you could call this a reset, right? Came into the red bars. And that would be the new A1 right there. If that was a reset, this would be your X2 failure. Came back down. And this would be a new A1. What you got to do is you got to just understand and just kind of think about how the big players are looking at this. Are they looking at this as a X1, X2? Is that how they're reading this? That's the question. Okay, because the big players are the ones that are going to move this market through these patterns. And it depends on whether they reset right there, what they think, what they think this market's going to do, where their positions and holdings are at. Of course, this is a new ETF. It's not been out very long. Look, you come back here, you can see the beginning. Started right here. Started on April 11th, 2023 at $24. And it's just gone up, up, up and away. So that may be an X2 coming in here, and we'll get one more drive out of this third drive pattern from this reset right here where you got the little flip-flop. All right, so Meta, we talked about that one, going to the moon. How about that Meta? Holy cow. Those guys are deep into the thing about Meta. They have AI as well. Now you can't pull up Facebook or you can't pull up any of their other little programs and play with it. But what they're doing that's so revolutionary is they're coming out with all these AI systems, just like Microsoft is with ChatGPT. So they're coming out with all these AI systems, but they're making them publicly available. They're not putting them behind a paywall. So they're free. And it's not like, oh, well, where's my free version? I would rather go use the Meta free version than the one that Land just demonstrated for me from Microsoft. Well, they don't have that. That's not there yet. Microsoft is so far ahead of everybody else. They're kind of the granddaddy. And it's ChatGPT. And they're actually two separate companies, but Microsoft, $10 billion kind of is the one who's funding them. So that's why everything's in Microsoft. You can go over to Microsoft and you can use the Microsoft browser and it's got ChatGPT in it. But Meta is giving all their stuff away for free. So they're creating all this stuff and then they put it out into the public domain. And then anybody who's a software computer programming company can go grab it and make their own product out of it. That's pretty cool, right? If you've got this kind of technology, if you got this kind of knowledge available to you, the whole world of knowledge, I mean, you can ask that thing anything you want. We're here in the financial industry and I asked it financial stuff. That's not the only thing it knows. It knows everything. It knows everything. You want to ask it about law? I had it help me. I bought a duplex the other day and needed new contracts for renters. The renters that were in there, we needed new contracts. Went to ChatGPT and started working it up, saying, hey, I need to research a new contract for renters. Let's start putting it in. These are the things I want to have. This is I just gave it all the information I had and it helped me write up a new lease agreement. I mean, it knows everything. Knows everything. Pretty cool. You ask it doctor stuff. Hey, my leg hurts. Why is my leg hurt? It'll tell you. All kinds of neat stuff. Hey, I'm overweight. I want to lose some weight. What's the best way to lose some weight? It'll tell you. It'll give you a plan. You can take a picture of it. You can take this thing. And I went into my kitchen and I took a picture of my fridge. Now, I'm not kidding. I did this. I took a picture of my fridge and said, hey, what should I have for dinner tonight? And it gave me a recipe and told me what I should have for dinner based on the picture I took in the fridge. Not kidding. It did that. It's pretty cool. All right. That's why the markets are going to the moon. Here's Mosaic. I don't know we have to go do a little research on them. We can look at them from a technical standpoint, but we should really know what they do. But they are down there basically breaking some pretty good lows in here. So could be a head and shoulders. We don't know. Obviously, we want to wait on this one as well. Just, you might not be interested in trading this one, but it's how to read the chart and what you'd be looking for in a situation like this. So you got your 3 drive pattern down right here. So you can see drive 1, drive 2, drive 3. We got our ABC up in here and the thing failed on us, went through a little triangle wedge formation and then collapsed and come down here and we're trying to break these blue lights. Oh, we did break them. So there's a blue light right there. So what you want to do now in this situation, this becomes the spring, right? The Wyckoff spring. So we're going to look for this market to come up, create the right shoulder. It's got to stay above this high, this head, and then break. And once it breaks down in this little region here, this is where you want to be the buyer for the next leg up. See if that market won't come up out of there. Now, whether you do that on Mosaic or whether this is just the strategy you use on another chart, doesn't matter. This is the same concept. It's just that's what's happening right now, right? We talked about Microsoft going to the moon. It is breaking right here, right there. We got a break right there. Just broke the blue lights. What does that mean, Lan? Is it going to go up one more time? Well, it's funny. I want to call this one drive. I want to call that all one drive and this all one drive. I don't want to call this the little break that they're going to negate this big run in Microsoft because of this one little break right here. I think they're going to call this one drive. Drive 1, drive 2, and I think we're going to get another drive in Apple or in Microsoft. And if you got shares, then you're going to get an opportunity to put some more on as this thing pulls back a little bit. How far is it going to pull back, Lan? Well, nobody knows, but we're going to put the Fibonacci ruler on there and we're going to make a scientific wild ass guess that market's going to come down into this region here, bounce off this 61.8. This is going to be a place where you can buy some nice, good, cheap Microsoft stock and anticipate that third drive 1, drive 2, drive 3. And since Microsoft is the leader in this AI stuff, there's no reason to think that it's going to slow down because, man, they are kicking butt. And of course, if Apple comes out and Apple says, hey, we just announced Siri can now do everything that Microsoft can do, you may see Microsoft go, oh, shit. Oh, damn it. Now I have to tell. I swore. Said a bad word. Now YouTube's, I got to go tell YouTube. Every time you post a video, if you say a bad word during the video, you have to go confess to YouTube. Sorry, YouTube, I said a swear word. And then you have to tell them I said a swear word in here. And you have to tell them how bad it was. Was it the F word? It's like going to the bishop every day you post a video. Did you say the F word? You can't take I want you to not take the sacrament for the next 3 weeks. Okay, I won't. Okay, there we go into match. So here we go. Across here. Go into a little triangle here on match group. I don't know what they do, but they're in a little wedge triangle formation here. This is drive 1, drive 2, drive 3, and we're getting ready to go one more breakout. I don't know. That's a tough place to be trying to make a trade recommendation. When a market gets back on the full drive, we're right smack dab in the middle of the Fibonacci sweet spot. We want to see it break one direction or the other, because this could easily break out and come down and give you a third drive down, drive 1, drive 2, drive 3, and then turn from here. Don't want to get anxious and too excited on the bounce off of this reversal and break higher. Technically speaking, you wouldn't want to be a buyer unless it broke above that point right there. That's your trigger right there for a long side, breaking above that high right there. And let's go into PayPal. I hate PayPal. Let's not even look at PayPal. That's not fair. I hate PayPal because I lost money on them. I lost a lot of money on them. I did a stupid thing. Took a big hit. I got in with options, and I was at the bottom of a third drive pattern, and I thought there is no way this baby's going to go to the moon at the bottom of the third drive pattern. And I loaded up on a whole bunch of options, and it didn't just go one more option. It didn't just go to a fourth drive and then go. It went like this. It went, Land, oh, you got all your options? Oh, what? Oh, you want to buy another one? Oh, it looks like I'm going up, doesn't it? Oh, looks like you're going to buy another option, are you, Land? Uh-huh. Boom, like that. Never recovered, lost the entire premium on all my options. So I don't like PayPal. Had bad mojo over here. There's your ABC retracement. There's your drive 1, drive 2, drive 3 to the downside. We started getting the pop to the upside, and it's gone into that same little triangle wedge pattern, hasn't it? Kind of come in here to this little pattern like this. It's trying to hold right now. It's trying to hold right there. So this is your area of support down in here. If you have had good experience with PayPal and would like to buy some PayPal, this might be a place. I'd be careful. Don't want to buy it right now, because it's got this is another little wedge pattern right here. And this is bearish actually. So don't buy right now. So this is a little flag, right? So this is the flagpole. This is the pennant. That, technically speaking, should flush out the bottom of that thing. So watch for that. How far back, Land? 1, 2, 3. Fibonacci. We're right back here playing with the Fibonacci sweet spot right now, but dead center of the Fibonacci sweet spot. We bounced right there off that 61.8, but it looks like to me it wants to go one more time. It wants to flush once again. Don't want to be a buyer. Q. We talked about the Qs. We're in the third, fourth drive. Drive 1, drive 2, drive 3, drive 4, and it's pushing up there. Right now, it's got a little flag formation in here. Boom, boom, boom. And since that's the D drive, you're at such a low probability of continued success that it's really scary to buy there, but that would be a D1. So this is your D, or D1, D2. This would be D2, way up here. D2. Land, I went and bought that great big thick Elliott wave manual, and nowhere in there. I read the whole thing looking for your A1, B1, C1, D1, D2, all these setups that you do, and I can't find that in there anywhere. That's because it's not in there. I made it up. I made this up. I invented it. I am an inventor. I invented it. Because if we take that book and we do it, I mean, you know, it's based on Elliott wave theory. This is your Elliott wave, X, 1, 2, 3, 4, 5, A, B, C, right? And that's what an Elliott wave is. So, but this one went to a D drive, so you can't really stop at that. So in that book, they're like, well, you're going to have to combine one of these drives to make it 3 drives. And we already talked about that. Okay, okay, we'll combine one so that we can fulfill the rules of that big, thick book, you know, or we have to have an inside job or something. You know, they got all kinds of little rules in there, all these caveats. If it doesn't go to the 3rd drive, they combine them and they do this and jig and jog. That's why you have a book that's this thick for something that's only needs the first. I always tell people, just tear the first 2 chapters out and throw the rest away, because the rest is all it's doing is just justifications as to why the 3 drive pattern didn't work. Just admit it didn't work and quit trying to make it do something it didn't do. Simplify. So I simplified the process, turned it into ABC drives, gave them, there's fractals inside. So that's how we get the A1, A2, A3. That's the same thing. You get that same theory out of that great big thick 4-inch thick book. So you come in here with your Elliott wave and you get your X, 1, 2, 3, 4, 5, just like that, A, B, C, right? So that's your fractal Elliott wave inside. That's how I'm labeling them. A1, A2, A3, A, B, A, you know, but this way I can look at them and I can make a probabilities table. And that's what I put in my book. So in my book, if you go get my book, what? You have a book, Lan? Of course I have a book. I'd show it to you if I had the slide up, but I don't. There's my book. Lan H. Turner. Go search it on Amazon and just search Lan H. Turner. You have to put the H in there for some reason or they won't pull it up. Lan H. Turner, and you can buy my book. And it's got lots of stuff in here. Lots of great information. Go a little bit farther and I can show you. Again, down here's where we get the Fibonacci stuff. So here's where we go through and I talk about the Fibonacci and the Elliott wave stuff and the Elliott wave drives. And then, of course, I example them in here. And this is where we have our probabilities table, where we show you what the probabilities of this stuff are. Here's something I'm going to talk about next week. We're going to go into and we're going to start talking about the buying points between the AB drive. Okay. That's something I call the spider web. So we're going to talk about the spider web next week. And we will highlight that because that's really important as well. And it's part of this is part of the same strategy. Okay. Now they've taken away my software. Okay, are we back? We're back. Okay, so there's your ABCs. And I just called them ABC drives. All right. So that made it a lot easier than you and I. And when we can teach in a class environment, we can be on the same page and not be quite so confusing. It's just the straight up Elliott wave stuff. But Elliott wave is important. I love Elliott wave. Don't get me wrong, man. That's the foundation of everything we do. Is that Elliott wave pattern. Elliott wave and Fibonacci. Okay. All right. C, sealed air. This is another one we had on our list. And it's come down. Ugh. It's an ugly 3 drive pattern. Huge, medium sized, tiny at the bottom. So that tiny bottom, that becomes your X3SA1. So that's your A1. So that makes this B1 right here. And then it failed. Failed, came down, and now we're coming. This is not doing anything, just going sideways. No reason to waste our time on that one. Smuckers. That's our old Fibonacci ruler that we drew in here in anticipation that this market was going to break right here and go to the 50% level. What did it do? Broke right there and went to the 50% level. Holy cow, Lan, you're good at this. Wow. Did you buy it with real money? No. Why not? Because I had all my money tied up in other things that we had already said, because there's a lot of stocks and I can't buy them all. Well, then why are you showing it to us? Because somebody else bought this one and they wanted to see that, you know, they can't just talk about the few stocks I trade. You got to talk about more so we have more opportunities. But there's reading the charts. That's how you read them. That's what this is about. This is a chart reading class. I'm teaching you how to read the charts. So the way we do that is we go back and we look at a whole bunch of charts and we read them. Drive 1, drive 2, drive 3. This is the S&P 500. Drive 1, counter trend. Drive 2, counter trend. Where are we at? You label this one. If I were to put this label right there, what would you call it? X3S A1, right? What's this one? Let's label this one X2S A1. What's this one? X1S A1. Wait, why you got 3 A1s? Because every time the market breaks like this could be a new rally, right? It could be a new beginning of a 3-drive pattern at every one of these points. At this point, it could come up and it could go like that, right? At the 3rd drive, it could come up and go like that and make a 3-drive pattern. Which one does it do it on more often? Well, the 3rd drive down, the highest probability. The 2nd drive is also a probability. It's not as high as this one, but it's higher than that one. So it's a high probability too. That's why it's the X2. And then X1 is the lowest probability that we're going to get a full 3-drive pattern out of an X3, X1S A1. That's the top of the 3rd drive. So this is your 3rd exit on X1. X1 is your first exit on the way down. So this is this right here. Let's label that one so we come back one more. This would be your X3S, not S. This is X3. It's to the long side. We don't, if it's S, we say short. S stands for short. We don't label the long, right? X3. So this is just an X3. That makes it an A1S, right? Actually, yeah, A1S. A1, X3S, A1. Same as this one. So right there, see that X3S A1? Well, there's an X3S, there's an X3 A1S. So it's just the opposite of this. See those two? Brothers and sisters right there. Okay. So we got to put this one up here like that. It's all in my book. Just go read my book. And it's all there. So these are your probabilities. And it tells you in the book, it also has the probabilities table. And it tells you, hey, your first X1SA1, and these are all Elliott waves. I mean, it's all Elliott wave theory. All right. I just made up a new way to read the Elliott waves, which gave you probabilities of how these things work. It's still the Elliott wave. We come down here, and then we get the little ABC pattern to the upside. So that's the Elliott wave on the way down, and I just label them. So they're breaks. This is where we start the new exit. We get out of the market here. We get into the market there. What are your probabilities, right? So that's what we're doing here. So let's get rid of all these arrows. Okay, let's get rid of this too. That's your Elliott wave pattern. So this is your X3S exit, the 3rd exit to the downtrend, the 3 drives down, and your first A1 opportunity to go long. I hate X1SA1s. Those are low probability. Don't ever try to go long on one of those. You'll get your hiney handed to you. Ask me how I know. All right. Taking a lot of experience to learn these probability patterns. So learn from my mistakes. X2SA1. That's a pretty good place to start buying into the position with small size, because you may have to go to the 3rd drive and do a little dollar cost averaging and add in down here. Unless you're PayPal, and then you come down here and then you go like that. And then that makes everybody mad because they got in on the X3SA1 thinking you're going to go to the moon and you didn't. Okay, so that happens too. So now we're here at the X3SA1. So this is our new A1 to the new upside. So that makes this one over here. Let's make this one here X1. So this is your X1, first exit to the downside. Now, you could also label that if you wanted to. It could also be X1. It could be A1S, right? X1, A1S, meaning that we could expect this market to turn and fall and come back down. But the probability, the likelihood of that happening is very low. So I usually don't even write it in there. But technically speaking, that's what it is, right? So we'd come in here, and then that makes this one. This is B1. So it's the next drive. It's the 2nd drive of the Elliott wave. It's a B drive. That would make this one up here the C drive. So this is the C1. All right. So that's C1 right there. And that would make us have one more right here. We're going to come in there and we're going to call that X2/A1S, right? So it's got a 2nd level of probability. Grab that tool there. That's our 2nd level of probability that the market might tank out of here and fall and come down. So there's your probabilities. All right. You got basically a 50-50 chance that this market's going to fall or rise. You got this is your decision point. That's what I call these, right? These are decision points. These are decision points. These are decision points. Each one of these areas like that, these are decision points. That's why I call it decision point trading. It's the title of one of my books I wrote. Where's that book, Len? I want decision point trading. Well, I haven't published it. All right. But it ended up being merged in with the other book. So it's on Amazon. Decision point trading is just not the title. So now the decision point is, if it breaks the blue lights, we will look for the third C1 drive, right? And then if it breaks the blue lights to the downside, or if it continues to fall, but in this case, below the blue lights and falls back down in here, we're going to continue to expect it not to go up and make a new C1. It's going to come down in here. But how far down can it come in here? It can come all the way down in here. Technically speaking, based on Fibonacci or Elliott wave rules, it could come down, and as long as it stays above this line, it's still in the C stage, or it's still in the B stage, right? It's still looking for the C drive. So as long as it doesn't break this level here and start making lower lows, that's the rule. But right in here, we don't want it to see come back too far, because if it comes back into that Fibonacci sweet spot, that's what it could do. It could come back into here. We don't want it to come all the way back down into this region down here. This is where we don't want to see it. We don't want to see it down here. As long as it stays above 61.8, we're happy. That's okay. You can do that. We'll let you come back that far, come back to here, but then we need you to go and be that C drive. Don't come all the way down here and then and then go up here and call yourself a C drive. Then we don't like that. It's too far back, right? That shows weakness. At that point, we would then anticipate that this market's going to break and turn and come back down this way. It just depends on how far back this thing pulls. We'll let it come back as far as 61.8, but then it needs to go, and it needs to go back up, and it needs to break all-time new highs, and it needs to come up here and give us the opportunity to get out with the blue lights crossover up in this region here. All right. So that's kind of what we're looking for here on the S&P 500 for that decision point. So watch your decision points. All right, guys. I think that was a pretty good lesson. Learning how to read the markets, probabilities, and a couple of opportunities. I think we got a couple of good trade opportunities in there for you. And let's just for fun jump back over and see what didn't do anything. Maybe a couple of small opportunities. We could have probably taken a little trade right here and got our money back. But after we got out right here, it tried to go. Look, it got up and failed. Boom. Rallied, come back down, and now it's just dead. It's just dead. All right, that tells me this market's a Friday afternoon market. It's dead. We tried our shot at it. We had a nice drop on the NASDAQ, but now it's dead too. It's looking like it wants to clip across here with this little double bottom and wants to rally and come back up to that blue line. That's what it looks like it wants to do to me. I'm not sure how strong it's going to be. Might be a little choppy, a little difficult to get up there. I don't know. All right, guys, that's it. I think I'll come back at 10 o'clock and see if we can't get a little bit more motion in this market. We'll maybe start at 9. We'll look at the 9 o'clock bell. They're not bells. The 9 o'clock hour, and see if the market wants to trend a little bit. We'll look for the first 15 minutes of the 9 o'clock hour. See if that trends, and then if we don't get anything out of that one, we'll come back at the 10 o'clock hour and see if that one want to trend. If we don't get anything at 10, we'll come back at 11 and first 15 minutes. If we don't see any action in the first 15 minutes of that one, we'll shut it down and we'll come back on Monday. All right, guys. Oh, maybe, if it's dead, we'll throw an option on there. I'll let you know how that all turns out. We'll see. That's hopefully a good little lesson for you, and you guys feel like that was worthwhile and got some good stock options in there or stock opportunities. And we will see you guys on Monday. Do all the YouTube stuff. Recommend, subscribe, click that bell. Give me some thumbs up if you like today's class. If I get no thumbs up today, I won't do this again. I won't go look at the stock market. We'll just sit over here and day trade. But if you like me looking at the stock market and analyzing stocks, give me the thumbs up. Lots of thumbs up. That means we'll look at stocks again.